Please give her a warm round of applause. Welcome, Anarghya Vardhana.
Hello, everybody. Good morning. Hello, Portland. I am super excited to be here today. It looks like they have the slides from last year, so I'm not going to spin through the slides, which is totally fine. There were only cute pictures on the slides, so we're all good. Again, really happy to be here today, talking to you about how to pitch a VC, tips and tricks of the trade, and hopefully busting some myths. My name is Anarghya. I work at a firm called Maveron, and we are hyper-focused on finding and investing in breakout consumer tech brands. So we are a consumer-only investor and look for companies that are leveraging technology and building a brand directly with the consumer. So before I get started, just to get a sense of who is in the room, how many of you have pitched a VC before, are currently in the process of pitching, or are going to pitch? Show of hands. Awesome. Well, a round of applause for all of you. That is a hard thing to do. And I hope that after this talk today and after your experience here at TechFest, you feel perhaps better equipped to pitch, are able to modify and iterate on your pitch, and have more successful pitch meetings. So before I dive in, fun fact, I have actually sat on both sides of the table. I've pitched myself for a health tech consumer company. My sister and I also had an attempt at a t-shirt company, and we pitched VCs, and that didn't quite work out. But I've been on both sides of the table, and now I'm an investor. And I hope that because of that, I can empathize and share with you an open, honest, and transparent look into the world of pitching. So let's address the elephant in the room. First of all, pitching is hard. It is uncomfortable, it is time-consuming, it is frustrating, it can be confusing, and it can take a lot of time and a lot of effort. And as an investor, I want my founders to do what they do best: build companies, build products, build services that delight your customer and that make people excited to use that technology. But as it turns out, many of these businesses do have an intense capital requirement, and therefore you do need to pitch in order to raise money. Well, let's see if we can make that a little bit easier today and hopefully shed some light on some of the ins and outs of that industry. So first, before you actually are able to pitch, you need to get that meeting. And there's a multitude of ways to meet a VC. You can attend events like this and get connected to them in person. It turns out that one of the most common ways is to get an email introduction. So for that first interaction to be via email. And when we talk about that email introduction, I always recommend a warm introduction. Sometimes I will wake up with 50, 100, even more emails in my inbox. But if an email introduction is coming from someone else in my network that I know and trust, I'm more likely to get to it faster, hopefully respond to it faster, and be able to take that meeting. You can find out who is connected to that investor in your network through LinkedIn or other means. So I really encourage people to lay that foundation of that network in order to find the right person to pitch and get that introduction. Now think about that initial email warm introduction almost like a college recommendation. On one hand, you could have the person say, "Hey, I know this founder, will you talk to them?" On the other hand, you could have them say, "I have worked with this individual. They are an amazing operator. They're starting a company. You have got to talk to them." You want that introduction. So make sure you find the right person to make that introduction, maybe even coach them in what you want them to say. And remember that most people these days are checking their email on their cell phone. So one of my biggest pet peeves in that initial email is lots of text. Lots of text is bad on desktop. It's even worse on mobile when you're scrolling and scrolling, and it often ends up getting piled and not responded to. Keep it short, 5 sentences or less. The main parts: what are you building, who are you, and include some compelling highlights. If there was an article written about you, a video, a podcast, include those links so that they can immediately see who you are and what you're doing. Now, a question people often ask is, should I send a deck in that first email? And as with many of the things I'll talk about today, you'll hear different versions from different investors and different firms. But I am of the opinion that you should not send a deck in that initial email. The reason being is an investor may open that email, may flip through the deck. We're human. They may form some preconceived notions about you, about the business, and brush it off. You are not in control of your story and your narrative. You want to be in control of your story. So initial email, keep it short, send it. If they respond and say, hey, I would love to see a deck, by all means, send it then, but I recommend not sending it in that first initial email. A couple other things in that email. You wouldn't believe the number of times there are misspellings. My name is often misspelled. I know I have a hard name, but it's available on the internet. Do the research, so you're making sure that you're putting the right name of the firm. It's very obvious if you copy and paste the same email over and over again. So do that customization, get those initial interactions correct, and it sets the stage for a great relationship from the start. Now, you got that meeting. What's next? Well, whether you are doing an in-person formal pitch or more of a coffee chat, something more casual, at the end of the day, you are a storyteller. You are telling a story about your company, about you, and guiding the investor through the storyline. And keep that in mind. You could get up there and kind of go through the pitch, but I would argue that that is less effective than engaging them, pulling them in, having it be a conversation, and guiding them through an engaging and fun story where they feel emotionally and personally connected to you and what you are building. In line with that comes personalization. All investment firms, while we have a same understanding and business model, are very different in their investing style, in their partnership, in the types of investors they have around the table. Do that initial research to understand how to customize the pitch. For example, at Maveron, we are super focused on consumer tech brands. If you are coming in and pitching us, talk about that. How are you going to build a brand? Who on your team is this brand building person? What will it take to build that brand? That type of customization is super critical. Another firm may not need that, but they may need something else. So really doing that legwork to understand what will make this investor listen, pay attention, and get excited will go a long way in that pitch, and hopefully in getting additional meetings and more in-depth digging in to the business. Also, you can talk to other people who have taken money from that investor prior to the pitch meeting. Find out, what else have they invested in? Do you have connections? Ask that founder, hey, what makes them tick? What do they ask? Are they super intense and going to grill into questions? Are they going to talk about numbers, financials? Figure out what is their style and be prepared for that, because again, every investor is going to be a little bit different. And for that reason, it's super critical to understand in that foundational work why you want money from that particular firm. There is a lot of capital floating around there. Getting an investment is getting into a long-term relationship. Building a company is hard. It takes 5, 8, 10, 15 years, maybe longer. And when you take investment from someone, you're getting into a relationship with them, and they're getting on your bus. Make sure you have the right people on your bus. What I think I missed when I was pitching VCs was understanding that it's okay to make that conversation two-sided. They're diligencing you, you should certainly diligence them. They're asking you tough questions, ask them tough questions. Ask about how they are on a board. Ask about how they handled difficult times when the company's not doing so great, because there are certainly going to be those moments, and you want to make sure you have the right people on your team rooting for you, supporting you, and opening up their network, their experience, and their background to help your business and your team be stronger. Finding the right one can take time. It takes a lot of meetings. It also is a lot of no's. I have talked to some amazing founders that have heard no 3, 10, 30, 60 times before they've gotten a yes. That's what I admire most about founders, is the ability to persevere despite those no's and to keep pushing. And if you hear no, it is completely okay in the meeting or afterwards to ask for feedback. Ask why. Learn from that. Improve, iterate, go on to the next one. Maybe the feedback isn't useful, or maybe it's something that you really can't change about yourself or about your business. But do ask for that so that you can make those changes as needed. So now to dig into a little bit of the tactical things in the actual pitch. First of all, some things are absolute musts. Having a strong grasp of the numbers is essential. If the investor asks, what was last month's revenue? What does your customer acquisition cost look like? What did you do during the holiday season in terms of sales? A strong, crisp, clear understanding of these numbers goes a long way. And if you have something on the slide that's a number, make sure that you can speak to that and back that up. I received a really good piece of advice when pitching, which was, don't convince me to invest. Convince me that your business and you and your product are amazing. There's a difference, and I think it takes a lot of practice to really nail that latter, to figure out the difference between the latter and the former, but figuring that out is really magical when it comes to the pitch. If an investor asks a question, many times I'm in instances where the founder is beating around the bush and not directly answering the question. It is totally okay to have an interactive conversation where you're working through the question together. It's also okay to say, look, I don't know. I'm going to go back, I'm going to figure this out, and I will send you an email. Or perhaps there's someone on my team or my co-founder who has a better sense of what you're asking, and I will follow up. That's okay. Now, people often ask, should I talk about potential exits? Should I say, hey, I can get acquired for this much money? Or, you know what, I'm going to go IPO and build $1 billion business. This is where the research on the firm comes into play. Understand the fund, what is their core investment. Try to get a sense of what they've done in the past. If you see a lot of IPOs that they're doing and they're a later stage VC, they probably need some really big numbers. If they're an earlier stage VC and you see them talk about a lot of exits they've had, Google acquisitions, Facebook acquisitions, great. Then maybe they're okay and their fund is smaller and they're able to have a different type of outcome. So doing that research can also go a long way and prevent you from having those awkward, uncomfortable moments where you may talk about a smaller number in terms of exit and that just doesn't fit with their investment profile. And again, it's okay to ask. It's okay to ask, what's your fund size? What are the types of exits you are excited about? What do you look for? Be open and ask about those questions. Now, people also ask, does the meeting have to be in person? I try to recommend always yes. I understand that there are financial situations and different situations where that in person is not possible. In those instances, try to do a video conference. It's really tough to tell that story and connect with someone over the phone. That psychological connection is largely missing. Video is a little bit better, but make sure even if it's video that you're pulling them in, that they're paying attention. And I do hope that all the investors you speak with have the respect to pay attention and connect with you, even if it's video over phone. But I think as a founder, really make sure that that is happening. And of course, in person is always best. Now, couple myths that I do want to talk about that I thought as someone who was pitching and that have been debunked for me as an investor. Well, I thought investors will invest if the numbers make sense. The numbers tell the story, they're probably going to invest. Not true. Investors are human, and like I said before, they're getting into a long-term relationship. Just because the numbers make sense doesn't always mean they will write a check. They may not feel connected to the product or the brand or the service you're providing. They may not feel a connection with you. They may not be inspired by what you're building, and unfortunately, that can result in a no. So be prepared for that. I also thought that it was not okay to ask in the meeting, hey, we're raising $2 million. Could you put in a $1 million check? Totally fine to totally fine to ask that. Also okay to ask for feedback. Also okay to ask questions. I also thought that investors were going to be experts in what I was talking about. And the reality of it is I'm in 3, 5, 8 meetings a day, and while I try to devote time prior to the meeting to understand who the founder is, what they're going to come in and talk about, I'm not always up to speed on exactly what's going on. Don't let that be an advantage for your pitch. If there are acronyms that you are using, explain them. You have a deep expertise and understanding in what you're building. You're spending day in and day out immersed in that world. They're not. Don't lose them in the pitch because you're talking at a level that they're not getting or they're not getting pulled in. Make sure they're connecting with you and make sure that you explain those little details that you know that they may not know. At the end of the day, I am always humbled and honored to be able to work with founders and to meet with them. I consider myself very lucky because I get to learn about 3, 5, 8 different businesses and people a day. We are in business because of all of you, and I'm consistently inspired by the passion, the tenacity, the drive all of you have to build something, to build your passion, and to keep going despite many no's. And for that, I really and sincerely thank you. Thanks.
Excellent, excellent work. Thank you, Anarghya. Have some water.
Thank you.
After that. Good morning, everybody. I'm Angela Jackson with Portland Seed Fund, and I'm excited to hear from you after this excellent pitch. Some more details. So if you have questions, keep them because we will have time for a few. Anarghya, yes. What do you think about being prepared no matter what the circumstances, such as today?
You know, I think some of the best pitches I have turn into conversations. And when they turn into conversations, the pitch may go in a direction where the founder didn't intend for it to go. We may dig into one particular part of the business that they thought they were going to kind of breeze through, and it may be because the investor has an interest in that, or they're a finance person, or they come from a branding and marketing perspective. And I think the best founders are prepared to go with the punches, able to talk, keep talking if the slides don't work out, and really be flexible.
Thank you.
Yeah.
I agree with that. You touched a little bit on storytelling. I'd like to expand a little bit on that. Does anything come to mind from all the hundreds and thousands of pitches you've heard of a particularly strong storytelling component? Some pitches start with, you know, I blah, 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 and this is why I pursued this. Mm-hmm. Others have great stories. And can you give an example of a great story into a pitch?
Yeah, and I'll talk from my experience of working specifically with consumer-facing companies. So we invest in technology that goes directly to the consumer. It could be an app, it could be a product, but it's direct to the consumer. And I think something that really stands out is when the founder or team talks about the end user. What do they like? What do they do? You know, when we think about consumer tech brands, we think about all the apps that we use, the products we use, the clothes we wear. At the end of the day, a lot of companies talk about the numbers and the rational part behind it. But we're all human, and most of the decisions we make are largely emotionally driven. And so when a founder can talk about those consumer trends, those emotional trends, and tell stories, hey, these people love what we're building, and here's what we've heard, and here's why, and here's the articles or social media buzz that's pointing towards it, I think that's quite powerful.
So one of my pet peeves as an investor and talking to a lot of investors is the investor is only sometimes capable of seeing if they themselves would buy it, mm-hmm. or their kid would buy it, or whatever. And then they come back and say, oh, I talked to my daughter and she would never buy this. How do you solve for that as somebody who is really having to get inside the minds of consumers who may not be your consumer appetite?
Yeah, and I think that's an excellent question and turns into a tough part of the industry. And unfortunately, it translates into many types of founders, whether gender, race, not getting invested in, if they're building companies that are targeting a particular demographic that may not resonate with a lot of the investors you're seeing today. And there's multiple ways to do that, at least for us. I think we are, first of all, self-aware that that happens. Right. We call each other out in our partnership meetings. Hey, just because we don't use this doesn't mean hundreds of millions of other people won't. And in order to learn that, we will go outside and conduct surveys. We'll look at multiple different sources, whether that's online tools that are available, to understand what is the pulse of the market, who is using this, why are they using it. And a part of our diligence process is talking to users. I'm not a user, but someone down the street is, and let me go find out who they are and talk to them. I think as a founder, it's also important to be really self-aware of that investors may have that mindset and may say, I'm not going to use it, so it probably isn't a big business. Call out that elephant in the room. Tell them, like, hey, this is probably not relevant to you and you're not the target demographic, and that's okay. Hundreds of millions of other people are, and let me send them to you. Be proactive. Say, I'm going to send you a list of users. Please talk to them. Please ask them why they use it. And here's social media that's doing super well for us. And I think calling that out and consistently being open about it will hopefully change when that happens and when people get no's because of it.
I think that's fantastic advice. Let's go in the other direction. Again, some of us in the room remember a show called Name That Tune in Whatever Notes. You get to a point where you hear enough pitches. Can you think of red flags that come out in 5 or 10 words or less where you just know that it's not going to work out?
Yeah. Be very, very open and cognizant of the competition. I think some of the red flags are when someone says, no one else is doing it, there's absolutely no competition. Someone else is probably doing it. I mean, there are some instances where someone is doing PhD work, and this is their PhD, and they have this one tiny bit of knowledge that they've spent 10 years working on, and nobody else in the world has it. But that's rarely the case. Usually it's a really amazing and innovative idea, but many others are trying it. Also, many other big tech giants could do it. And if I ask, hey, great, I love your business, why doesn't Amazon do this? And if the response is, well, they can't, I don't know if I buy that. Or if they say they don't have the smart people to do it, I also don't buy that. Have a really clean, crisp answer around it. Maybe it is that Amazon would never do it because it doesn't align with their business model, or they don't need to, or they're focused on other things. Those are acceptable, but I think that's a big red flag when someone ignores the competition.
Excellent. I'm going to ask one more question, and I'm going to give you a chance to sharpen your chops and get some good questions ready for Anarghya. So my last question is, we see a lot of companies, you see a lot of companies, others in the room see companies. We all have different opinions. Entrepreneurs sometimes hear very different advice. Even in 5-minute meetings a day, the advice might be totally different. How would you recommend an entrepreneur deal with that?
That's a great question. And again, another reason why I admire entrepreneurs, you have so much noise in your ears from your different investors you're talking to, advisors and stuff. One thing that I see work well is kind of document all of this. Oftentimes there may be patterns and they're just told to you in different ways and there's different flavors of it. Figure out the connecting theme and see what that deep thing is that people are getting at. I think also at the end of the day, you are building your business. You're building it for a reason. There was a reason you got up one day and said, I'm going to do this. I'm going to work 18 hours a day and not take vacations and struggle through this. And that's you, and that's your nearest and dearest advisors, co-founder, family member, parents, siblings, whatever that is. So distill all of this advice with them. Make sure you have those trusted people who can give you that gut check, because you may hear different things. And if an investor asks or tells you something that seems super, super off, ask them why they're saying that. Maybe they have scar tissue around a similar company they invested in that did that one thing and it crashed and burned. And so if you get behind their emotions for saying that, you may realize it's not relevant to you, it's just some bad memory that they have.
Yeah, that's excellent. Okay, how about we go to the audience? Audience, do we have any questions? Looks like there's one there and there.
Quick question. We know democratized applications work. You mentioned Amazon. Tell Steve Jobs, if there's an app, I just happen to do this. That's consumer journeys, empowerment journeys. So that's not Amazon. Amazon rips off digital properties from organizations and from our local communities, and we're all oblivious to it. When are we going to wake up on data fracking? And same thing in education with design thinking. Now we're starting to see Harvard backtrack after 335 years. Coming with applications, once again, getting the consumer involved and employees involved. Those are important for all of us to recognize, because that's the most profitable conversation. So anyway, so I'm going to ask.
What's the question?
Yeah. So the question is,
because I want to give
so mobile directness and on-demand companies going out in the community, helping people first, Steve Jobs, and then you just happen to make a device. How many of those companies come to you currently?
Was it about on-demand companies? Sorry, I didn't hear the exact thing.
On-demand companies.
So how many on-demand companies are we seeing that are pitching us? I think one of the consumer trends we saw a year or 2, 3 years ago was that everything was becoming on demand, and that was a large partly because people were getting used to the Uber type of behavior, and there was other things like food and things that were becoming delivery based. We're not seeing as many on-demand companies anymore, and I don't know if you're in a similar state. Yeah, we're not seeing as many on-demand companies anymore. We're seeing other trends, certainly. Mobile continues to be very strong, and people want a mobile presence, but on-demand has decreased.
Time for one more.
Hi. So my question is, does it really, I don't know about you, maybe the whole industry of investors, do they really follow buzzwords, the trend of investing, or you have your own mindset of what you invest on? Like .NET, most of people investing in .NET. Most of the people investing in organic products. Is that something true, or you have your own mindset?
So you're asking about buzzwords and whether you need to really tailor your pitch around those
Correct.
things. Yeah, and that's a great question because there's a lot of buzzwords around now. Everything is AI, everything's a chatbot, everything is machine learning, virtual reality, those types of things. I think first and foremost, like, tell your story. What is your company? If it has a big data component to it and you're rendering it in an SMS-based chatbot, great, talk about that. What I discourage people from doing is trying to fit your pitch into something that is buzzy, because it's not going to be authentic to you, and that's gonna really show through. And find the right investors. You know, like I was mentioning before, there's a lot of investors. Find the ones that are well suited for you. You know, if you're building something in the health tech space, go find those health tech investors or people who have done investments in that space and who don't necessarily need you to be a virtual reality health tech company. You just do what you do.
Anarghya, thank you so very much. Let's give Anarghya a big hand.
Thank you.
Thank you.
Thank you for having me.